Bismillahirrahmanirrahim. Welcome back, everyone. Today I'm going to give you guys a stock analysis video on one of my most favorite companies out there, known as Advanced Micro Device, ticker symbol AMD. I have been invested in AMD since 2016. So let's look at, we can see that I've been invested in AMD around when it was $5-6, and I look forward in continuing to invest. At the same time, I think that it will continue to do well in the next 10 years to come. So I'm going to quickly take you guys to my portfolio. This is my Robinhood portfolio. Currently, it is around $41,000, and I'm up around 27% or 28% without including the dividend. And if you guys look on the right, I currently have 41 shares of AMD. And this portfolio says that I have 41.5 shares at an average cost of $34. In my other portfolios, that's where my average is a lot lower, around $5-6. The reason I'm showing you guys this is because I want to be transparent with you guys. I'm not a person who only talk about investing. I actually do it. And this is a real portfolio with real shares with real money. As always, before we continue, I have to give you guys a quick disclaimer. I'm not a financial advisor, nor do I know you personally or your financial situation. I am not responsible for any of your gains or losses in the stock market. I'm not here to certify if any companies are halal or haram. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. Now I want to take you guys back to Seeking Alpha. This is one of the websites I use to analyze companies and stocks, so definitely make an account with them. It's free, it doesn't hurt. So currently, if we look at AMD, for 5 days, they're down around 2%. And if we look at it for 1 month, they're down around 18%. And if we look at it for 6 months, they're down around 19%. So this shows that this is a very good buying opportunity, because in the last 6 months, they're down around 19-20%. And if we look at it for 1 year, they're up around 18%. I think they are beating the S&P 500. And if we look at it for 5 years, they're up massive 617%. So now we're going to scroll down. So what is AMD? Most people already know what AMD is. I'm going to give you guys a quick overview. So AMD Advanced Micro Device, it operates as a semiconductor company worldwide. They operate in 2 segments, in computing and in graphics, and they have huge amount of products out there. They have accelerated processing units, chip, graphic GPU, data centers, development of services and servers. They also have technology for game consoles, such as, I think they have their AMD makes the chips for Xbox. If you guys go on their website, you can see a lot of their products. So now we're going to take you guys to their website this is some of the products that they have. You can check it out. We want to scroll down a little bit, and I just want to quickly check the availability to make sure to see if they have the products or not. So these are some of the products, and if we scroll down, we can see that these products are, look, sold out, sold out, sold out, sold out. And this is a very, very good sign, because their products are quickly selling out. That means that they're in high demand. When I also go to, say, Micro Center and different places, and I look for AMD, most of the time, or a lot of times, their products are sold out. That means that people are willing to buy their product, and which, as a consumer, as an investor, this is a very good sign, because their products are selling, and that means that they are making money. Always definitely look into the products before investing into a company. So now we want to take you guys back to the charting, so we can see we're at Seeking Alpha. So when I'm analyzing a company, I always like to compare it with the S&P 500, because it gives me a base mark or a benchmark on how well the company is doing relative to the market. So we have the AMD right here. We have S&P 500. We can see that for the last 1 year, AMD is up almost around 19%, while the S&P 500 is around 9.3%. So currently, it is beating the market. So let's take a look at for 3 years. We can see S&P 500 is up 239%, while S&P 500 is only up 61%. And then if we look at it for 5 years, should see an even bigger marginal differences. We can see 600% while it's up 100 something percent. So I can extrapolate that this time would continue here. Over time, the S&P 500 should continue to beat the S&P 500. It has been beating it in the past, and they have a great future outlook to continue to beating the market, which is as an investor, which is a very positive sign. So now I want to take you guys back to the fundamentals. By looking at the fundamentals, it makes it really easy to make decisions. So we're back in Seeking Alpha. We're going to scroll down and we want to look at their revenue. In 2017, AMD was making around 5.2 billion. And then if we fast forward it to 2021, they made a revenue around 16 billion, 16.4 billion. We should expect them to make around $25 billion in 2022 this year. We can see a nice linear growth year after year, and this is what we want to see. This is the type of companies that we want to be invested in, where their revenue is increasing year after year. And this is a very phenomenal revenue growth. Not only do I like to look at the revenue, I also like to look at their earnings, if their earnings are increasing. And we can see 2017 they were making around 14 cents in earning per share. In 2021 they're making a massive $2.79, and then in 2022 they expect to make around $4.04 in earning per share. And at the end we're going to talk about it. Why is their revenue dramatically increasing in the last 1 year or the last 12 months? Again, let's take you guys back to another website that I like to do my analysis, called stockanalysis.com. We're going to look at financials, and then we're going to look at the income statement right here. So the reason why I like to look at the income statement is because it tells us whether a company is making money or not. Show you guys their revenue growth, or their revenue. You can see year after year, for the most part, it is increasing since last 2016. And if we look at their revenue growth, 21%, 23%, 4%, 45%, and then 68%. So they are having a massive growth around 20, 30, 40, even 60, 70%. So their revenue is increasing, their percentages are looking nice, just like I stated before. What about their gross profit? Same thing. We can see a clear sign that their gross profit is increasing year after year. 2016 they were making around 1 billion in gross profit. In 2021 they were making almost $8 billion in just pure gross profit. As a lot of you guys already know, I'm a Muslim investor, and to be a Muslim investor you have to look at certain criteria in order to meet a certain threshold, if it's permissible, to invest in that company. We're going to take you guys back to my notes, and we're going to quickly go through the Sharia compliance checklist. We have A, B, C, and D. I do want to point out that I am not an Islamic finance scholar, so please seek out a person of knowledge on this subject. So in order to be a Sharia compliant 4 checklist, first of all, the company needs to be halal. We said that it is a chip making business, so for the most part we can see that the business is halal. We have to take a look at the interest. The interest should not exceed more than 5% of their gross profits. Back to their income statement, pull out the calculator. So we can currently see that their interest expense is around $34 million. Comparison to the company, it's not a lot. Ideally, we would want companies that have zero interest or is not paying interest at all. So we're going to try to apply the 5% rule, and this is just good investing. So they're at 34 million, and if we look at their gross profits is around almost, we're going to say 8,000 or 8 billion. So we're going to do 34 divided by 8,000. 34 divided by 8,000 equals, times it by 100 to get percent. And we can see that their interest is less than 5%, or way less than 5%, is 0.4%. So again, in order to be Sharia compliance, the interest expense cannot exceed more than 5% of their gross profit. And in this case, it is even less than 1% of their gross profit. Another thing that I do want to point out is that if we look at their interest expense, clearly see that over the years, they have been decreasing their interest expense, which shows that they have been decreasing their debt year after year. Hopefully, by the time year 22, their interest payment is even less, eventually goes to zero, or at least in terms of interest, they don't have any interest expense at all. And hopefully, they do that. If they want, they can knock this out easily because they're pretty much a cash cow. By looking at the income statement, we can tell if a company is making money or not. Guys, if you guys made it this far, make sure you guys hit the subscribe button, hit the like button, and share the video. It helps us. Remember, as I said, in the investing world, we're all on the same team. So we want to look at the operating margin right here, which is, if we scroll down, we can see the operating income right here. So we're going to take you guys back to my notes. What is operating margin? And this is a very, very important percentage or important number when evaluating a company. Operating margin is a percentage of revenue left as income after subtracting the cost of revenue and all operating expenses from the revenue. And it's a simple formula. We take the operating income divided by the revenue, times it by 100 to get in a percent form. In other words, operating margin measures the percent of revenue a company keeps as operating profit. Pretty much this gives us a metric to indicate to investors if the company is profitable or not, or it indicates to investors the profitability of a business and offers a convenient way to compare competing businesses in the same sector or even different sectors or different industry. So you want to look out for this number. This is a very, very important number in evaluating or determining a company. So again, we're going to take you guys back to this stock analysis website. So again, we're going to be looking at their operating margin, and we can see that in the beginning, 2014-15, they weren't really making money. As the years have been progressing, they're making 6%, 9%, 14%. Even now, last year, 2022, they're making 22% in operating margins, which is very good. Anything over, I would say 10, 15 is great. This shows that the company is generating huge amount of cash. In summary, I'm going to take you guys back to, just to summarize it, I think that AMD is a strong buy. I'm not telling you guys to buy. I just want to point out that in terms of analysis, it is a strong buy. Remember, make sure you check out the disclaimer. I feel that AMD is significantly undervalued based on its revenues and earnings. And recently, AMD has completed the Xilinx and Pensando acquisition, which is expected to increase margins and free cash flow. I expect the demand for semiconductors to only increase over the next decade to come. And based on this quick analysis, I think that AMD is a strong buy and it will continue to grow. As I pointed out, that I currently have in this portfolio around almost 42 shares, and I will continue to add. As always, guys, thank you. See you guys next time. Bye, everyone.